Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, the S&P 500 hitting brand new all-time highs today. However, the QQQs feeling a little bit left behind. That being said, the overall market showed some very nice breadth. All of our major sectors, well, most of the major sectors, ended up in the green. Nice moves on financials, nice moves on healthcare as well. However, within certain segments of the market, there were some pockets that did show a lot of weakness today, namely in software and cybersecurity to be specific. So as we move further into the month of July, with the markets at all-time highs, it raises the following question. Should we be possibly taking some gains off the table and sitting in a little bit of cash, waiting for some dips? Or should we possibly be taking profit on certain sectors that have ran a ton and maybe allocating that cash, staying fully invested into other segments of the market that are maybe a little bit left behind as of currently, just playing the overall rotation of the market with the big institutions? So we'll take a look at that in today's video. Speaking of today's video, as a matter of fact, we're going to do a couple things together. Number one, since there's no macro news to highlight today, also no new tariff developments to highlight today, we're going to take a look at earnings, right? We're going to take a look at one company earnings, which is going to be Delta Airlines. Now, I don't usually cover airline earnings on the channel. They're just not a very big component of my investment strategy, but they do provide a nice insight into the health of the consumer. So we will be dissecting Delta Airlines' earnings. They were up about 12% today and lifted the entire industry overall with a very nice end of the year outlook, something that they did not want to provide last April and May in the height of the tariff sell-off. After we're done with Delta Airlines earnings, we will take a look at our major sector analysis, go through all of our major indexes, do a little bit of technical analysis, and see which ones are possibly ripe for some trades and which ones are running a little bit hot. Then we will do the exact same thing across our big tech list, go through the names individually, technical analysis, and derive where can we maybe make some swing trades and where can we possibly position for some long-term portfolio buys. At the end of the video, we'll be talking a lot about rotation, guys. Today, you'll notice from the list on my right-hand side right there, a lot of software and cybersecurity names were to the downside. Some software names have never really gotten much love since the month of May. Other sectors, such as cybersecurity, were running very hot, and today is one of the largest days of pullbacks on that sector in quite some time, at least in the last month and a half. So we'll take a look at our biggest gainers and losers of the day and try and identify all the possible opportunities on this list that you guys can take a look out for in the next coming trading days. That being said, that's going to be it for today's video, so it should be a pretty fun one. The portfolio updates will come, of course, as of tomorrow on the Friday recap session. Let's jump right into the action now, shall we? So the SPY up 0.28%, but the Q's getting a little bit left behind, 0.14. And let me bring your attention to the heat map right here. Big tech was a bit of a mixed bag, right? Microsoft, Amazon, Meta were down. Google, Tesla, Apple, NVIDIA there to pick up the slack. But take a look here, guys, at some of your software corporations, right? Namely, a lot of these cybersecurity players were down in a big way. Additionally, software applications, the tiny little segment within the overall tech segment, right? That was most of these companies on this list were down a lot. CRM down 2.5, ServiceNow down 4.5, Intuit down 3. And the list goes on. IBM, Accenture also down. And look at communication services, right? Google was good, but Meta, a lot of the telecom services, and Netflix as well, down about 3%. Now, the technology index is somewhat mixed overall. So our goal today, especially at the end of the video, is going to be identifying some of the plays that are very high quality companies, but that are currently just slacking off. Let's just say it for what it is, right? Consumer defensives, the same thing. We had some very nice performance in consumer defensives, but the two largest names, Walmart and Costco, have been struggling as of recently. We'll also take a look at those at the end of the video. Financials doing well. They have earnings starting off next week. I'll remind you, starting on the Tuesday session, we start getting all of the major banks, JP Morgan, BlackRock, Citigroup, Wells Fargo, and that does continue into the Wednesday session with Goldman Sachs, Morgan Stanley, and Bank of America. So financials looking very nice, leaning into their own earnings. Healthcare, actually a very nice day of performance today, everywhere except for healthcare insurance, which remains the weakest component of that index overall. The bottom half of the market, though, guys, looking pretty good. So we've been talking about the whole growth to value rotation in the last week. It's not a very obvious rotation overall. It's not as if every single day you'll see tech and growth red, and every single day you'll see the bottom half of the market, the more value-oriented segment of the market, down, right? Or up, rather, right? But you'll notice on days like today, the rotation is more and more apparent because the bottom half of the market has not really participated, not only this year, but some of these stocks in the last 2 years roughly have done almost absolutely nothing. So we might just have a little bit of a rotation on our hands. And I'll remind you, a rotation of that size is not something that'll be fairly obvious over the course of 1, 2, or 3 trading days, not even 1 or 2 weeks. It's an extended rotation. It doesn't mean that people are fully pulling out of technology. They're just rotating a bit of the money out of here and into some of the lagging names that have been left behind. And we've seen that rotation happen over the last week, essentially since the beginning of the new quarter on July the 1st. Moving into our one-day relative performance here, guys, you can see that most of the segments of the market were higher, but technology and communication services were down. On the 1 week relative, that leaves us pretty good, all things considered. Most of your market segments were up, led by industrials and utilities. Tech and healthcare coming in 3rd and 4th place. To the downside, communication services and consumer defensives. Consumer defensives, just because some of the largest weights here are Walmart and Costco, and they've been net decliners here over the past 1 to 2 weeks overall. But some of the other components of this index are showing a bit of signs of life, especially companies like Pepsi that have just kind of been left for dead over the course of the last, let's call it 6 to 9 months overall. So keep that in mind. Now, before we get into more technicals and talk more about that rotation, we're going to take a look at Delta earnings. And what I want to focus on here is the health of the consumer, because that is what's really important here. We know that back in February, March, and April, it was all about the tariffs, and people were pulling back on spending, expecting incredible increases in prices and incredible inflation as a result of those tariffs. But we know that that inflation has not yet manifested for a very key reason, right? The tariffs have been paused for the last 90 days. So the inflation that was supposed to come at the end of this month, at the early stages of, the late summer into early fall, that has now been pushed back. Now the effective tariff rates will come into play August the 1st. And then it becomes a question of a 45 to 60-day delay to then see the actual price increases. So the inflation, it's not to say that it's not coming, but it has been delayed by that 90-day tariff pause, during which the effective tariff rate was only about 10%. So keep that in mind. But we want to understand, how is the consumer feeling now that we're through the entire fear cycle of the initial volley of tariffs? How are they feeling now? Are they still spending money on travel? Well, let's go have a look, shall we? So Delta was up 12% on the day today, up a very nice beat on earnings by about 2%, and a tiny marginal little beat on revenue. So why are they up 12%, guys? Well, it has to do with the guidance. A lot of companies pulled guidance in the April to May sessions, and now this company, at least, is resuming guidance for the end of the year. So Delta shares jump 11% after airline reinstates 2025 profit outlook, as the CEO says the bookings have stabilized. So let's take a look at the article here first, and then I'll give you guys my ideas and impressions as to whether or not I'm playing airlines or whether or not maybe I'll be playing other travel names. So let's look into it real quick. Bookings have stabilized after a drop in demand earlier this year, said the CEO, though at lower levels than the airline forecast at the start of 2025. So a nice little resumption in guidance, however, still under the guidance that this company had forecasted at the beginning of the year before the tariff drama all started. Moving on further, Delta expects its adjusted full-year earnings of $5.25 to $6.25 a share. That is down from the January forecast of $7.35 a share, which the CEO predicted would be the best year ever for the company. In April, Delta said it couldn't reaffirm the forecast as on-again, off-again tariffs and hesitant consumers dented bookings. Rival U.S. carriers also pulled their guidance. The CEO said that the passage of tax and spending bill and the Trump administration rolling out more trade deals with less rhetoric and more action are giving customers more clarity and confidence. People are still traveling, he said. What they've done is they've shifted their booking patterns a little bit. They're holding off making plans until they're a little closer to their travel dates. And so that shifted some of the bookings and yield management strategies for the company. Let's move on further. They expect revenue that's flat to up to 4%, topping the forecast for a 1.4% sales increase. So you have a little bit of an uptick on guidance for the end of the year. All of these companies refuse to provide guidance for the end of the year, so it's nice to see them actually post a number this time around. Delta posted strong growth from sales of higher-priced seats like first class and from its lucrative American Express partnership, which increased 10% in the second quarter from the same period last year. Airlines have become more reliant on travelers who are willing to spend more to fly rather than more price-sensitive customers. Corporate travel has also stabilized, as the CEO said that businesses have more clarity and confidence than they did earlier this year. And business and corporate travel, guys, is a very big component for the airlines. But it's in line with last year, not the 5 to 10% growth that Delta expected at the start of the year. So it's better than previously anticipated in April and May, but still not in line with the forecasts that were made in January. While fares have dropped across the US, Delta's premium product revenue rose 5%, as sales from the main cabin fell 5% from last year. So the premium customers and the business and corporate customers are coming back, but the lower end consumers are still being somewhat a little bit picky, all things considered. Now, more customers are choosing to take European vacations after the traditional peak summer months to avoid heat waves, crowds, and high hotel rates. And maybe that's why their guidance for Q2 was not all the best, or rather guidance for Q3 was not all the best, because possibly a lot of the sales might be coming in at the tail end of that and into the early portion of Q4. So that all being said, that is what we had to look at on Delta. All in all, guys, it does show one thing, that the consumer does have more confidence than they did at a similar, in the April to May season when these companies pulled their guidance overall. Now, in terms of airlines, guys, you can clearly see that the chart is breaking out and it's looking quite good for some possible follow-through continuation, maybe back to some of the highs that we had early January when they were giving all of that very rosy guidance. However, airlines are not my favorite pick. And that for a few key reasons. Well, first off, you'll notice that airlines traditionally have a very low price to earnings ratio. So don't base your analysis off of that, looking at this one saying it only has a 9.8 price to earnings ratio. They have always had a very low price to earnings ratio, guys, because it's such an inconsistent business, right? They have very heavy capital costs to keep a modernized fleet of aircraft. The maintenance costs for their aircrafts are very high. And we know that airlines operate on quite thin margins, and it is somewhat of a cyclical business. It ebbs and flows with the direction of the economy. So if you take a look at the price to earnings history ratio right here, it oscillates between 6 and 10. And that's been the case, guys, for the longest time. Ever since I've been in the markets, the airlines have never really seen price to earnings ratios above 8, 9, 10 overall because it's such an inconsistent business. And you can kind of tell that from the chart, right? From 2014 up until now, you can argue that we really haven't done much. And it's not just Delta Airlines, right? Other stocks like American Airlines, same concept. United Airlines, same concept, although a little bit better, but still, right? Since the peaks of, 2015 or even 2017, are we that much higher? Not really, right? It ebbs and flows with the direction of the economy. So airlines are not my favorite bet for that reason. It's a very cyclical business, and it is also a very capital intensive business with very low profit margins. Look at the profit margins for airlines. 5%, 4%, 7%. It's just kind of all over the place. Now, I don't mind playing businesses that have somewhat low profit margins, such as Amazon, such as Costco, such as Walmart, etc. But those businesses have a more consistent revenue stream overall and a more consistent EPS stream too. That being said, airlines do also run a lot of debt, right? They have very large debt cycles. Now, good thing for Delta, they've been paying down a lot of the debt that they took on board in 2020 and 21. They've been paying it down, but you can still see right here, right? The company is trading at a $37 billion market cap. They have about $22 billion worth of debt. They don't generate a fantastic amount of free cash flow. It's okay, but still, it's good to see that they have been servicing the debt overall, but still, it's a very capital intensive business. So rather than, if the thesis here is for resumption of travel demand, well, number one part of the thesis has to be the no recession scenario, right? No recession because of tariffs or job losses, etc. If you have that thesis in mind, well, then you can play different travel stocks, right? There are many different types of travel stocks, and we're going to get into them in a few short moments. Airlines are not my favorite. Can we possibly see further increases on Delta, further increases on United, further increases on American Airlines, further increases on LUV, Southwest Airlines, which is looking pretty good for a breakout pattern here, especially in terms of the monthly chart? The answer is yes, of course. You can find some gains here, but maybe not the more consistent gains, right? Some more consistent quality companies that have more consistent business models and that are more capital light. Being a capital light business, guys, is often an overlooked criteria of many companies, Booking.com. Booking.com is one of my favorite players in the overall travel space. They do an absolute ton of buybacks, and when we did the analysis after Q1, their CEO kind of said the same thing. They were gaining market share, they acknowledged the uncertainty, but said that they are global, right? So that obviously did very well for them. That being said, the valuation right now is not all that bad. Considering the fact they do a lot of buybacks, it's a capital light business, they generate a ton of free cash flow, and their margins are fairly good and increasing. This is the type of business that I like a little bit more. Even a company like Airbnb. Airbnb has been kind of stuck here doing a whole lot of nothing, but if we do get a travel boom with a no recession thesis, and obviously with the tax cuts, etc., people may have more disposable income, Airbnb could be a decent proposition for some upside. So those are two companies that I would be looking at. Even if you want to go a little bit more, let's call it boomer, right? Hilton and Marriott. The reason that I like Hilton and Marriott, guys, is because they're franchise models. They do not own the hotels that they operate, right? So that being said, they have fairly decent profit margins, Hilton and Marriott. It's the exact same business model. They own almost 1% or a bit less than 1% of all the hotels that bear their names. They only own the flagship hotels, usually in very large cities such as New York, Tokyo, in the best locations. But let's say in Tokyo, there's maybe, 6, 7, 8, 9, 10 different Hilton or Marriott hotels. The company itself may only own one, and it's going to be the best property, right? So that being said, Marriott and Hilton are some of my favorite overall, let's call it travel and hospitality stocks, just because the business model is so consistent, so resilient, and also fairly capital light in the form of how they run their structure. So that being said, the airlines, even though we have this pop, could be an interesting trade, but it's not a long-term investment for me. It's a very cyclical business overall. So hopefully all this analysis helps you kind of just, work through the travel and hospitality segment and kind of understand what are the different pros and cons of all these different business models overall and why I like certain ones over others. That being said, that's all I had for you guys for Delta. Now let's move into the technical analysis portion of the video. And of course, we're going to start off with the SPY. Up 2.8% today, and of course the bulls are in absolute full control of this chart. Yesterday we were noting the fact that we had a higher low established right here at about 618, so we barely grazed above the all-time highs today. In the event we give it all back and flush these lows, that would be a daily downtrend and would be the start of weekly consolidation. Good thing though, the bulls, as I always say, are in full control of this chart, looking pretty good. And if we do fall back, guys, we got a very nice support zone down here. 610 down to about 597 is that support range. You got the 12 EMA curling up to this location as well. And I'll also remind you, we have very positive seasonality coming into July. 10 out of the last 10 July seasons, or rather months, have been positive, right? Average return of 3.35%. Let me just move my head out of the way so you can see the average returns here for the last 10 Julys in a row. So it's overall been looking very good. I would not be surprised if the month of July is still a very bullish month for the markets. The monthly timeframes, in my opinion, hold the key. The way the June candle closed does lead us to believe that we will get some continuation. We already do have some continuation right now, but if earnings are positive and companies start resuming guidance, because I'll remind you, a lot of companies pulled their guidance for 2025 during April and May. If other companies such as Delta Airlines resume their outlooks, well, you may just have a very bullish earnings season, which could catapult the markets a little bit higher. However, we don't necessarily want to be focusing on companies that are at the all-time highs. If we want to get the best risk to reward, we want to be focusing on certain pockets of the markets that are seeing some declines, playing the volatility and trying to get the best possible levels. And we'll talk more about that at the end of the video when we take a look at the biggest gainers and losers, yeah? On to the Qs right now. The Qs down about 0.14% because some big tech names were left behind, but a lot of software players, right? Having some heavy declines, which did weigh the index down, despite semiconductors being a positive impact on the Qs. That being said, we're looking very good right now. It's a nice, clean daily uptrend, but the higher low is very close right here. 549.83. No new highs. In the event we roll over and lose the 12 EMA, that would be synonymous with a daily downtrend and would also be synonymous with a bit of weekly consolidation. Good thing, similar to the SPY, the bulls are in full control of this chart right here. Your weekly higher lows are much lower, 523.04. The bulls have tons of space to fall back a little bit, take a bit of a breather, establish some support probably in around this level right there, 537 down to 520, and then maybe go for one new leg of rally into the rest of earnings season. And earnings season, the big weeks at least, kick off off next week. Some of the major technology companies, ASML, right? That's going to be on Wednesday. That's going to be big for semiconductors overall. And then, of course, on the Thursday session after the close, Netflix. And thereafter, the weeks following, you get most of all the other big tech companies, but it's going to start next week with those very two big companies. Now, moving on to XLF. So financials today up 0.6%, not too bad. And we were noticing that the bulls were in full control of this chart, looking for a higher low, yeah? It's very likely that the higher low has now been set. They set it perfectly into the 12 EMA and into our support range that we were monitoring, 52 down to about 50.3. So keep that in mind. The bulls possibly looking for a little bit of upside, but financials, as I was saying, right? They have earnings starting next Tuesday and Wednesday. So of course, that is going to move this chart a lot. But if we had to have one bias, I would say that it's a bullish leaning bias. Your bulls are in control of all the major timeframes right now, looking very good. We got a lot of support below us, so I would not be surprised if the bulls can give another leg of expansion. A few key bullish components for financials right now are the fact that, well, in terms of their investment divisions, they're making a lot of money. And aspect number two, a few weeks ago, it hasn't been talked about a lot, but I've mentioned it a few times on the channel so far. We have a relaxing of regulations in terms of liquidity requirements for the banks, which allows them to deploy more capital into various other investments. And we're also coming into a rate cutting cycle, which will be good for their net interest income projections. So keep all that in mind. Moving on to healthcare right now. Healthcare up about 0.61%. Healthcare still, though, struggling to close above this guy right here, 137.56. Need to close above to actually, cement the daily uptrend in motion, but it's not looking too bad. The cleanest time frame of them all, in my opinion, is the weekly. The weekly is looking pretty good for some expansion. I've commented on the fact that the weekly MACD is now crossing after being net negative since the month of March. We are now finally starting to cross over with some bullish momentum and seeing a little bit of rotation. That being said, we are also reacting from this gorgeous support range, which was established for 2 years between 2021 and 2023. So you might just be looking for a bit of a monthly upswing. If the upswing does continue, I'll remind you the next target is going to be 144 up to about 147.5. But as of right now, healthcare, despite certain segments of healthcare being a bit weak, such as the health insurance names, other names, right, and namely pharmaceuticals and medical devices, have been performing quite well. Moving on to SMH right now, semiconductors, guys, looking very good, almost, not quite, almost a new all-time high, but the patterns are looking very good on this one. Daily uptrend is very clear right now. The higher low is set at 278.75. So if we just push higher, no problem at all. You're looking for psychological levels of resistance because it's a blue sky breakout. No resistance above, right? Next target has to be psychological 300 on SMH. So keep that in mind. And in the event, guys, we unravel, right, and cut this low and roll into a daily downtrend, well, you guys obviously know what I'm about to say, right? The weekly bulls are in full control. We have an absolute ton of space. The weekly higher lows are all the way down there, 235, looking for a new higher low for further trend continuation. A shallow pullback could see a first test of support being around 275. And of course, the much more significant level would be one level lower at about 260 down to 250, where you have most of the moving average support overall. So keep all of that in mind. Semiconductors are your lead bull right now. So if you want to see the SPY and the QQQ roll over into weekly consolidation, this sector needs to roll over first. Your lead bull needs to pivot into a bear, and then you'll probably have a good indication that you're ready for a bit of weekly consolidation. But as of right now, we're not seeing that on the chart. Moving on to the Russell right now. Russell up 0.51%, not terrible, but coming into our resistance range, 225 up to 231. So keep that in mind. Support is all the way down here, 216 to 207. That being said, the bulls are in control of this chart right now. Daily higher lows are now set at 218.20. A lot of space, right? And even if we go down a little bit, consolidate a little bit, daily downtrend, the weekly timeframes are key across most of the major sectors right now, guys, right? It's a very nice weekly uptrend. So in the event you get rejected here and the whole market consolidates a little bit after such a nice rally over the past 3 weeks, well, IWM is going to do the same, and they might just come back and test this location down there. Anything above 207 would just be looking for a higher low for further trend continuation. So if I'm looking for more swing trade longs, and I absolutely want to wait for these pullbacks and be patient, I would be waiting for a back test of this location overall. It's a very strong level, guys, right? Resistance, support, resistance, support, and huge support from all the way back there. It's a very significant level, so it's going to be tough for the bears to just smash through it as if it's not even there. You are just looking for the back test and possible expansion leg. Moving on to, that's pretty much it. We'll cover the other major sectors on the Friday session tomorrow. Talking about the VIX, we're going to go through this quickly. I've said it many times. When the VIX is low, guys, it's time to buy, but it's not time to buy things that are clipping into new all-time highs. The VIX, you're going to look at it for leap call options, right? Or any type of option that you're looking to do. When the VIX is high, it's a good opportunity to sell options. When the VIX is very low, like right now, it's a good opportunity to buy options. If you're looking for leap options, you should be looking at companies with very high quality business models that have not that have rather been left behind from the overall rallies, right? Rather than just buying leaps on NVIDIA up here. I'm not saying that it can't work. It definitely can work. But there's other high quality companies that have been left behind. Maybe you have some of them in your long-term portfolios, right? You don't need to look too far. I'm not saying you have to go down all that much, but even Amazon, right? Amazon is not really broken out so far. Fundamentals are still looking very good for the company. So if you're a fan of Amazon and want to build a leap call contract for the next 2 years, well, when the VIX is very low, you get some pretty decent pricing on those leap call contracts. So keep that in mind. That's how I analyze the VIX overall in terms of how I use it for options. Moving into the dollar not doing too much. So we're only going to spend a couple seconds on this chart, guys. The dollar is weak, but I've talked about it many, many times on the channel in the last 2 weeks, guys, especially coming into earnings season. This is the first time in the last roughly 3 years that a lot of major companies with international revenues will have currency tailwinds. They've had currency headwinds, which reduces EPS, right, to the bottom line. Now they will have currency tailwinds for the last quarter. So I'm expecting that to be a positive catalyst for some of these earnings if we have some currency tailwinds and companies reiterating or resuming guidance that was previously suspended. I do think we should have a fairly good earnings season ahead of us, especially since the impact of the tariffs has not yet been felt. Moving on to the yields right now. Yields still, you're just doing absolutely nothing right now. Where you really want to see yields start to break down, the 10, you need to start crossing 4.2. Give me a breakdown below 4.2, and then we can talk about, okay, maybe we're finally looking to actually start dropping some levels on yields and alleviating some pressure, of course. In the 20-year yield, it's kind of the same analysis, but the level is 4.7 to about 4.65. Give me a breakdown below, and then we can kind of say with a bit of confidence that, okay, maybe the monthly tops are in and we're going for the downswing and finally start to move into, a bit of a lower yield environment overall. Moving into the TLTs, the TLT 20-year bonds, if you're using the yields to calculate some trades on bonds, yields, I've been saying for the past 2 months, guys, bonds are a pretty good trade, right? But you need to be very patient with this trade. So if you're having options on it, you need to have some very long dated options, either this or just accumulate. I know some of you guys like playing TMF. The problem with TMF is that because it's a leveraged bet, even when TLT moves sideways, right? This one just erodes and erodes and erodes and erodes a little bit. So be very patient in building your positions on anything associated with bonds. I still think it's a good trade, but it has to be a very patient trade moving into the rate cutting cycle. Moving on to gold right now. Gold, not with much price action to report whatsoever. The chart's been the same roughly for the past 3 days, essentially, right? So what we're kind of looking for here on gold is we're looking for a daily higher low, which we have found now. Looking for that and looking for an expansion leg. Unfortunately, resistance is very close, 33.81 to 33.50. So that being said, the weekly time frame is some more clear price action on gold, in my opinion. Weekly higher lows are set. You're looking for the expansion leg. There is a bit of a swing trade here, right? In terms of a long, your long would have to have a stop loss below 32.44. If you're going for the weekly leg of expansion, guys, the stop loss has to be below here. Why? Well, because if we flush this, obviously the weekly higher lows are not set. And we might just be looking for a bit more monthly consolidation. It's been monthly overbought for a lot of months in a row right now, or very extended from the 12 EMA too. And it would not look so awkward if gold does pull back and kind of meet and test the 12 EMA. It's done it so many times. Sometimes it doesn't have to come all the way. It can come down a little bit, drop a level, and then move sideways until the 12 EMA catches up. But it's very rare to see gold so extended from a 12 EMA and not either pull back into it or can drop a level and consolidate sideways until it catches up, right? So keep that in mind. That is why the stop loss level is absolutely crucial. Now, moving into Bitcoin. Bitcoin, guys, brand new all-time high, looking very strong. Almost, it clipped in 116,500 to be specific. And I mean, this trade was very obvious, guys, right? Position longs were there, going for the daily uptrend, recaptured by the bulls. And the clearest time frame of them all was this weekly, right? This weekly was kind of just absolutely gorgeous in my opinion. It was a bull flag. We've been commenting on it for the last month and a half at this current time, right? Above resistance, that was new support. Beautiful, beautiful, beautiful consolidation, accumulation above that range. So a decent area to start some positions. And now we're finally getting the next leg of expansion. The key time frame for me, when we covered this last week, pretty much the 1st of July, the key time frame for me was the monthly chart. Very, very poised for some expansion, and now we actually got the expansion leg. So the next target, now that we've hit 115, you have to go with psychological round numbers, guys. 120, 125 are the next targets, looking very strong. And even if we pull back from here, who's in control? Well, obviously the bulls, looking for a higher low for further trend continuation. And where can we pull back into? If we choose to retest a level, will it be kind of this zone right there, right? The top end of the range that we just broke, talking about the previous all-time highs, 111 down to roughly 110 for a back test, but Bitcoin looking very good, and some of the altcoins looking very good as well. I know I don't talk about the altcoins a lot because it's a more stock-focused channel, but I do play them and I do share a lot of these trades with our Discord members. I mean, been crushing it. We started the Bitcoin long. I took this trade for the expansion, but I do a lot of my Bitcoin trading on chain. So you can see I did take the entry here for the expansion leg, looking pretty good. That's the Bitcoin trade. We have another trade on Solana as well, which we also went for the expansion trade there too. But not only that, even in my crypto chat right here, there's a few other ones. I've been holding ETH spot for a while since the correction, the depths of the correction back in the tariff sell-off, and even something like Hyperliquid I've been holding, guys. This one's a fantastic trade, $14 entry up to about 44. So those trades are passed right now. I don't talk about them much on the channel, but I do talk about them in the Discord. If you guys ever have any questions for me in terms of crypto, you can obviously ask me down below. We are looking good for a bit of a leg of expansion in altcoins, but just with altcoins as usual, guys, don't get too greedy, right? Play it from level to level. If you want to swing trade these, play them from level to level, take your profits, secure the gains. You can hold a little bit if you want to, but you should always be clipping out gains on these altcoins. Same thing for Ethereum, right? I'll just cover this very, very, very briefly. Ethereum, fairly obvious trade right here is a weekly higher low, looking for the expansion. Anybody who positioned here or maybe here, looking for the next leg of expansion following Bitcoin, you're now into a take profit level overall. So it's fine to take some profits and then just wait for a further expansion, but you need to be clipping out of your profits progressively, that being said, right? At least that's how I trade crypto. The rest is up to you. Now, that's pretty much everything for our overall market review. Now let's move into some big tech names, shall we? So Apple up 0.6% today. Not a very bad day for this stock overall. We were noticing that the bulls had a very beautiful daily upturn right there, seeking a higher low coming into the moving averages, but not quite clipping into the 204, 205 level, which would have been a backtest of support, just missing it by a fraction. Apple is still looking good for a bit of expansion here. It is still under the 200-day EMA, into resistance right now, 221 up to 210, or down to 210 rather. So Apple, all things considered, I've been talking about this for a while, guys, right? Weekly MACD cross after being negative for a very long time, guys, since the month of December, essentially. That being said, the weekly, big accumulation range. It got very tight and now possibly looking to break out to the upside. Apple is one stock that's been deeply left behind this year. Look at the year-to-date performance of Apple. It is still down 15% year to date. At the end of the day, guys, Apple is one of the largest weights in the index. I understand that they've been having their problems with the AI rollouts, a bit of extra cost for tariffs, and revenues have been flat. But at the end of the day, this could be a very interesting catch-up trade, and you may just see me with leap call contracts that'll be starting probably soon to benefit from a possible broadening out rather of the tech sector and Apple playing a little bit of catch up overall. I do not think it's a bad trade. I think there's some good risk to reward to be had here. Moving on to AMD right now. AMD up 4.15%. Very nice expansion leg by AMD. There was a daily downtrend, which of course was just some weekly consolidation. We almost backtested support perfectly, 132 down to 120, and now the bulls are going for it again. So we will see if they're able to crack through this resistance range, 145 up to 155, something like this. The good old, break out of the range, retest it, and then go for the further level. In the event that they don't, and we pull back a little bit more and go for a consolidation range between support and between resistance, something like we just saw on Apple, right? Just understand what's happening here. You're just going for weekly consolidation. After a very big move, it's very natural to have either sideways or a downtrending bias consolidation phase for AMD. I still think AMD is a very good opportunity if you do share the same fundamental thesis as me, which is pretty much looking for the expansion of their EPS expansion of free cash flow, expansion of margins, and especially expansion of revenue. I mean, from last year through 2028, AMD is literally going to over 2x their revenues, right? So there is an expansion thesis here. So you might think you're late. I really don't think that anybody's late on AMD right now. If you have that thesis, of course, for a short-term swing trade, you've missed a lot of the, the juicy volatile move because it was a 2x, almost a 2x from the lows to here, right? You're probably not going to find a 2x as quickly on AMD right now, but there is still some upside, but you might need to be a little bit more patient than the upside that we just had. So keep all that in mind. The chart is still looking pretty good in my humble opinion. Moving on to Amazon right now. Amazon still flat, still sideways, still trapped within the context of resistance. 228 down to 217 is the resistance range that the bulls are struggling with right now. Keep an eye on the lows right here, 218. If you break 218 to the downside, it is a daily downtrend, but have no fear, the bulls are still here, right? Weekly uptrend is very nice. Higher lows are right there. 207, 208 are the weekly higher lows. Any pullback is just going to be looking for a bit of consolidation before trying to crack that level again. That is if they don't just do it right away, because there's always a catalyst for them being able to do it essentially just right away, right? The good old breakout, retest, and run trade. So for me, there's two trade opportunities here. Either wait for a pullback, right? Which will just be looking for the weekly higher low, maybe closer to the moving averages, 214 down to about 210. That'll be a nice little pocket to start some swing trade longs for a second attempt at the resistance range. Or the infamous breakout retest trade, because then we can have a defined stop loss. You break out, you claim the level, you retest, then the stop loss goes below the lows, and then you're targeting weekly levels of expansion, which would be the all-time highs, of course. Those are the two trades that I'll be eyeing on Amazon myself. Amazon's fundamentals are absolutely fantastic and is still my biggest position across all my portfolios, whether that's options, such as leaps, or whether it's long-term shares. I really like the way this company is moving into the next 2, 3, 4, 5 years. Moving on to Google right now. Google up 0.59% overall today. Not that bad of a day for Google, but also still, Google is still also kind of stuck in this range of accumulation, right? Not that bad, kind of like Amazon. Pay attention to the lows, 174.29. You crack that, unfortunately, it is a new daily downtrend. And at that point, you'll just be looking for more weekly consolidation. It's a very nice weekly uptrend by the bulls right now, right? And a lot of space. Anything above 163, looking for a higher low for further trend continuation. So I have some leap call contracts that I started down there. I do not think it is too late if you agree with Google's thesis that it's fundamentally undervalued, right? And that being said, if we do pull back a bit more, well, I can also do some short puts. I'm always looking for short puts on Google, 172 into the 160s. I want to play the support range on any quick declines for the stock, which brings up the volatility, which means I can get some very decent entries. Those are the two ways that I'm playing Google. Yes, I have some long-term shares, but I do have some leap call options for 2027 because it's undervalued and I'm taking that risk, but I also enjoy playing it with the wheel strategy under the market. Moving on to Google right now, Meta, 0.76% to the downside on Meta. Not doing a whole lot of anything is Meta right now. That being said, the chart doesn't look bad. It's just kind of sideways consolidation. Bit of an unclear level right now for Meta. They're still battling with their prior all-time highs in the 740 range, but it's not looking bad. The one area you have to pay attention to is 713. If you break 713 to the downside without new highs, that's a daily downtrend, and that will be just further weekly consolidation. Good thing Meta has a short-term level coming up soon, the bottom of which is 682, this whole area of weekly consolidation. So the chart is not looking too bad. No swing trades for me right now. They have earnings coming up in about 2 short weeks of time. I like this one fundamentally a lot, though. It's not excessively cheap right now, trading at the higher end of the 20s in terms of price to earnings. Forward price to earnings about a 28. For 2025 right now, the peg is above 2, and that's considering growth for the next couple of years. All things considered, guys, I wouldn't mind nibbling on Meta shares here, but I'm definitely not going to all in a position right here. I would rather wait for a bit of a pullback. The valuation gets a bit more manageable if you start trending under 700, so we'll see what happens. On to Microsoft right now. Microsoft down about 0.4%. Not a terrible day for Microsoft overall. They're still protecting the time frames, as you can see right there. The daily bulls are still in full control of this daily uptrend. Bit of a pullback leg right there. Pay attention to the new daily higher low. I know it's very tight, guys. Very tight price action right now. We've been overbought for how long? Since the early portion of May, guys, right? 2 months of overbought conditions, and Microsoft so far does not care. If you're looking to somehow short Microsoft, why instead, I mean, everybody doesn't want to buy a falling knife, right? But people want to short the inverse of a falling knife, right? Wait for the bulls to roll over. And with a rollover, you need to see a loss of the daily uptrend. Wait for them to crack the higher lows, crack this trend, this 12 EMA that they've been holding this entire time, and set up the downtrending pattern. And then you actually have the recipe for weekly consolidation. That being said, the bulls are looking very healthy, and any weekly consolidation might just bring us into the 466 area, which is the 12 EMA, the prior all-time high from right there. It's not a very substantial level. Of course, the bigger one would be down here, 460 down to 444, which are these tops and these guys right there. But still, it's kind of the closest level that we've had because we really have not established much support on the way up right there. And in terms of a fundamental view, guys, I'm not adding any shares of Microsoft up here, but I'm definitely not selling any. They're at the top end of the valuation right now. Curious to see what happens on earnings. Moving on to Netflix. Netflix down 3%. This is what I mean when we were just talking about Microsoft, right? This is what I mean when I say be patient for a rollover of the daily downtrend. When you get the rollover of the daily downtrend, right, like this, the entry goes here, and the stop loss is above there, of course, right? And then you're looking for weekly consolidation into the next support zone. Support zone for Netflix is essentially going to be 1215 down to 1185. So 1215 down to 1185. Daily downtrend for the bears right now, which of course entails weekly consolidation. Whenever we're all the way up here, people say, no, I'm late. I'm just going to buy in now because we're never going to get any consolidation, even after 10, 15, 20 million weeks of upside in a row. I'm not going to do it. I'm not going to wait. I'm just going to buy it up here, right? Just wait for the consolidation, guys, right? Wait for a retest of support. Wait for a retest of the 12 EMA. More often than not, it will happen. So keep that in mind. Netflix has earnings next week, next Thursday, and they're going to have to show some pretty big numbers to justify the size and speed of this rally. So keep all that in mind. Netflix currently trading at a quite rich valuation in terms of historical context. Moving on to NVIDIA right now. NVIDIA up 0.75%. Brand new all-time high for NVIDIA. Again, I think they cracked it by a penny. Am I mistaken? 164.50. Yeah, they cracked it by 8 pennies, guys. So brand new all-time high on NVIDIA, but barely. But the stock is looking very good. Obviously, a lot of bullish momentum. Daily uptrend is key, and anything above 151.35 on a pullback looking for a higher low for further trend continuation, right? And even if we roll over into the daily downtrend like you just saw on Netflix, what are you looking for? You're looking for the same thing as Netflix, right? Just use Netflix as a good example of when a name that's been so bullish for the past 2 months starts to roll over. It's just healthy consolidation, right? So where could healthy consolidation take us into for NVIDIA? Well, the key area is going to be still 150 down to 145. That wouldn't look so bad, right? After such an expansive move. Just coming down a little bit, daily consolidation, wait for the 12 EMA to catch up, clip into the support level, and then maybe position for some more swing trade longs. So that's how I'm going to make this trade happen on NVIDIA. I'm not going to buy it up here, but if we do get a pullback, I will definitely be participating in that pullback. Keep that in mind. I'll redo the valuation for you guys tomorrow on a lot of these names. I know the valuation now is no longer at 140. They're roughly, let's call it, 15% higher than that right now. So clipping to the top end of the, 30s in terms of price to earnings, 35, 36, 37, possibly, probably like 36. And the PEG ratio will probably be closer to a 1.6 right now. So not a terrible valuation, but it's also definitely not as cheap as it was back there when kind of we were buying the stock a lot on the channel. Keep that in mind. Moving on to Tesla right now. Tesla with a good day today, up almost 5%, 4.73 to be exact. Looking quite good. We know the context was a daily downtrend. The bulls are trying to get a nice move back in motion. We're having a nice retracement size, so they reacted perfectly from support as well. 300 down to 260 is that range, but the clearest time frame for me, because what the bulls need to do here, they need to recapture the daily uptrend, similar to what Apple did, right? Look at this chart. Tesla, consolidation, right? Tightening range between a resistance level and a support level. It's the same thing as Apple. Same thing. So if you're looking for the expansion, wait for the daily uptrend. Yeah, that lets you know that possibly the bulls are coming back into more momentum. And that's the exact same thing we're looking for on Tesla. So if you do get a nice daily uptrend shift, such as this right there, well, that's when you can maybe try and think of playing it for the upside into the resistance range. Some people just want to play it here and buy it here, put a stop loss down there and go for the highs. That's fine as well. But if you guys are looking for the weekly expansion trade, well, you'd kind of want to have the daily uptrend first. It lets you know that the bulls are trying to establish some control. That being said, Tesla has earnings Wednesday, the 23rd of July, and the main focus, once again, will be margins, EPS, and free cash flow, because we know they just launched a whole bunch of credits both on the consumer side, but also on the regulatory credit side. Moving on to Palantir right now. Palantir down 0.44%. Not the worst day for Palantir, guys. The bulls are looking quite good. A very, very healthy retracement right there. You're talking about a, 786 retracement. So even if the bulls fail this all-time high and have to two-step this process, they create a lot of space off the lows, yeah? Anything above 129 right now, looking for a new higher low and maybe a two-step recovery process of the daily uptrend, because we know they had it back here. They lost it with this engulfing move. Now they have to get it back. But the time frame that makes the most sense to me is the weekly time frame right now. If the daily is unclear to you, well, the weekly is looking very good. Anything above that same 128.40 is just looking, guys, for another leg of expansion. And even if we consolidate a little bit, not the worst thing in the world, right? Support stays put 125 down to about 120 for Palantir. If Palantir has another sharp decline, I might be looking to play some short puts down here in the whole 125, 120 range. Palantir not with earnings much before the early stages of August. Moving on to SOFI right now. SOFI up 3.71%. Fantastic expansion by SOFI. It just keeps going, guys. Retail every single morning, 9:30, big retail buys. Every single morning, guys, almost the past 2 weeks at this point in time, right? Big retail buys and then tapers off throughout the day. But all that being said, looking quite good right now. Daily RSI is starting to get quite rich at about 82. That being said, the next resistance area for SOFI is kind of nowhere close, guys. It's really at the top end here. $24, $23 for SOFI overall. But is buying SOFI here with the rest of retail participants, is it a good proposition? Well, that's up to you, right? You can argue that you're playing momentum, and that's fine. If you are doing that, just pay attention to the 4-hour time frame. 4-hour time frame is key for maintaining momentum. If you see a loss of the 4-hour time frame and a loss of the 12 EMA, they've been protecting this entire time since they started this big move from the $15 range. Well, then you know that probably the daily upswing is finished, right? And then you might just be looking for a bit of consolidation. So keep that in mind, right? I'm not saying not to buy it here. Well, I kind of am, because it's not very good. It's not good practice to buy things up here, guys. Overbought RSI. You're late to the trade. It is what it is, right? We can't be early to every single trade. It is what it is. I was playing SOFI a ton back here. I accumulated a lot of long-term shares back here, and now I'm very happy that it's up here, but I'm not adding any more. It's just not the way that I do things on in terms of my personal trades or in terms of my long-term buys for the portfolios. So keep that in mind. That being said, the bulls are looking strong. Any pullback, anything above 1740, looking for a higher low. And if you get a sharp pullback, right, well, then the next area logically will be probably 18 to 17. This guy and these guys. I know it's not the strongest level, not as strong as 16 to 14, but it's the closest level that we have, so keep that in mind. Moving on to Uber right now. Uber down 0.25%, but still not looking too bad in the grand scheme of things. Daily uptrend is very nice for the bulls right now. Anything above 90, looking for a higher low for possible further trend continuation. Where can we maybe pull back to? Well, this might be a logical area, right? The same highs that we just blasted off from, talking about 93. Maybe a nice little back test here. The 12 EMA is there, and possible rally. If we just rally from here, then you're looking for the break of 100 psychological. Uber is looking very strong right now, but Uber is the same thing, right? Am I buying Uber up here? No, I did a good job of buying more for my long-term portfolio down there. There was a swing trade opportunity here on the breakout retest. When Uber was up here, it's just like SOFI, it's just like everything. When Uber was up here, nobody thought it was possible that we could pull back to the level. You can pull back to levels, guys. And if it doesn't pull back and it just leaves you on the sidelines, that's fine. For every one stock that just never pulls back, there's going to be like 5-6 stocks that do pull back, and just be patient for those, right? Respect your strategy rules. That being said, Uber bulls are looking very strong, even on the weekly timeframes, looking for some further expansion, and any consolidation, extended consolidation, looking for a higher low, anything above 83, higher low for possible further trend continuation, looking pretty good. And last but not least, TSM. So TSM down about 0.9% today. Not the worst day for TSM, but you got to pay attention to the higher lows, 227.65. They protected them today, but if you unwind, that's the first daily downtrend on TSM since all the way back there. If you do unwind, it's going to be a bit of weekly consolidation, and the bulls have tons of space to work with here, guys. They're in full control of this weekly time frame overall. If you're looking for a back test, that's perfectly fine. The next support range stays down here, 211 down to 200 overall. Would not be so awkward to see a TSM, even if they don't fully get there. There's ways to play things, even if you don't think it can fully get there, right? But if it does get there, maybe you want to buy, but you're not sure if it's, let's just say your thesis is, sorry, I'm fumbling my words. Let's just say you want to play this zone, but you're not sure if it's going to get there. It starts declining somewhat rapidly, right? if it starts declining somewhat rapidly, well, maybe you can sell some put options down here, which ensures that if it does get down there, well, you get some shares and maybe you can play the rally. However, if it doesn't get down there, maybe you just get to collect some very juicy premium. It's kind of the best of both worlds if that is something that you're looking out for. So keep that in mind. TSM with earnings, not that far out, talking about next Thursday. Thursday is going to be a big day for the markets. Next Thursday, starting off, they're going to be pretty much reporting earnings. So I'm fairly excited for all things TSM on that being said. Now, that's pretty much everything for your overall market rundown. Sorry for my voice again, guys. I'm a bit sick. I'm trying to power through these videos, but a lot of talking throughout the day kind of is the last of my voice. I do the live streams in the morning for like 2-3 hours, takes away a lot of my voice, and then now I do the video. So hopefully my voice is not too bad for you guys. But let's jump into the biggest gainers and biggest losers of the day, shall we? Okay. So first off, let's talk about CoreWeave, shall we? Because we cover this one on the channel fairly regularly, but we're going to talk about the, of course, acquisition of cores, right? And I was talking about the fact that there may be some arbitrage here, but the arbitrage is a bit more complicated than you may anticipate because it's an all-stock deal, and sometimes all-stock deals are tricky, especially when the timeline is so far out, such as a timeline like this one. The acquisition is going to be made possibly in Q4. So think like November or December is the potential acquisition timeline, right? So here's what we have to understand about this acquisition. It's an all-stock transaction at a fixed ratio of 0.1235, meaning, right, that the valuation, the amount of shares that they're getting is, well, for every share of cores that you're going to be getting 0.1235 shares of cores. Now, you might think that at the current valuation, that cores is undervalued. We're going to do some quick math right here, yeah? So CoreWeave right now is trading at a price of 137, okay, times 0.1235. That would give you a tentative acquisition price on cores of 16 point something, right? 16.91 to be specific. So you would assume that there's some natural arbitrage, right? The only problem is we don't know what the actual share price of CoreWeave is going to be at the time of the acquisition. However, we can look to the options market to derive where could be the possible locations, especially to the downside, because now we're in a downtrend, and we also have a bit of an overvalued status on CoreWeave as a company right now. So that being said, let's have a look and I'll show you guys a little bit of a trick right here. We're going to go with the at-the-money options for November, okay? Look at the at-the-money options. Now, there's no 137 strike, but we're going to use the 135 as a proxy. For November, these at-the-money puts are paying, let's just call it $40, meaning the market thinks that CoreWeave possibly, because you can sell this put option and lock in a price of 135 minus 40, which would be 95, right? So the market is pricing in the capacity for CoreWeave to possibly drop as low as 100 to 95. With that option, it would actually be, closer to about $95, right? Well, let's call it just under between 100 and 95. You guys are understanding what I'm trying to say here, right? So let's just say we take 100, yeah? So $100 strike, $100 stock price for CoreWeave at that time, $12.35, is $12.35, right? What is Core's trading at? Marginally above that. So you can clearly see that the market is pricing in the most to the downside. The market usually always does this, guys. It prices in the worst case scenario, and anything better, it thereafter adjusts. Does it sound familiar? Sound familiar like the massive tariff sell-off that we had? It prices in the worst and then it readjusts, right? So that is what's happening right now with cores not being at its arbitrage price, at least not proportional right now to the stock price of CoreWeave currently, right? Cores is trading under. So the arbitrage is entirely reliant on what do you think the price of CoreWeave is going to be in November. If you think the price of CoreWeave is going to be higher than now in November, then indeed there is a case for some arbitrage to the upside. If you don't, however, then maybe there's not as much arbitrage as you might think, right? So it comes down to you as an investor, which direction you want to play that one. I'm just here to say what I'm doing on CoreWeave right now, because as you can see, it's a very clear daily downtrend. Now, we are coming into some of the last lines of defense right here, 136. If you break 136, you're coming all the way down here into the mid-120s. My favorite way of playing CoreWeave, which I've played many times so far this week, let me just erase this. I'll show you, right? I've been talking about this all week, is selling put options. Look how many times I've played CoreWeave this week. 3 times. Whenever we get big red days on CoreWeave, I write put options below the market. This was a 125 strike, made some money there. This was a 130 strike the following day, made some money there and closed it. With such good volatility, you can take advantage of the big declines. And another trade that I made today, and I was out the exact same day. Wrote this one in the morning, closed it in the afternoon because the chart wasn't looking so good. So I took my profits, right? We wrote it when it was down here, played the little bounce, and thereafter, the volatility subsided. I was able to close the contract, and then we got leg number 2. So what do you think I did after leg number 2, guys? Well, of course, I went in and I wrote another option this time for next week. Next week, 110 strike for 70 cents. I'm getting 0.5% for every single one of these trades, and I'm following the market, or the stock down while giving myself a good buffer, right? Is it going to fall down to 110 by next Friday? I don't know, but if it does, it'll probably be close to daily oversold. The lower time frames, such as the 4-hour, will be deeply oversold. The 1-hour at that point, although oversold right now, it can bounce and then move lower. It'll be oversold. All I'm here to say is I'm looking for the maximum amount of distance between me and my strike price and only playing the volatility. If we get a nice bounce on CoreWeave tomorrow, what do you think is going to happen to this option, guys? Well, obviously, with such good distance, a majority of that contract is going to end up worthless, and I'll be able to close it for a nice profit. If it comes down a lot and very hard, I will take assignment and I'll play the heck out of covered calls, because the covered calls right now are just so juicy on a week-to-week basis. Take a look at CoreWeave right now. The at-the-money covered calls are paying like $7. That is a ridiculous amount of premium for one single week, right? $7, let's just take it, by 135 is like 5%, right? So if it comes down to 110, I'll probably be able to get that anywhere between 3 to 5% for a single week. And I'll just keep playing covered calls. Maybe I even put a bit more time on them than weekly contracts. Maybe I do like 2, 3, 4, 5 weeks out type of thing, right? So that is how I am playing CoreWeave personally, rather than constantly trying to guess the bottom in a daily downtrend and just constantly try to play upside, right? Let the bulls show you where the bottom is. And for that, you will need a recapture of the daily uptrend. Until that time, I will only be playing the volatility on this one. Hopefully that makes sense. Now let's move into other names real quick. Fortinet. Not only Fortinet, but all cybersecurity. Look, Fortinet, Palo Alto Networks, Zscaler, Net. We also had some declines on CrowdStrike, etc., etc., etc. Now, my favorite companies in cybersecurity are Fortinet, CrowdStrike, and Palo Alto Networks. Those are the 3 top ones. Shout out to Cloudflare as well. The problem with this industry, guys, other than Fortinet, which trades at a reasonable valuation, and I use those words, you know, you take it with a grain of salt, right? This is the most reasonable valuation of all those companies. Fortinet, for me, the way that I'll be playing this is once again with short puts. I'll be writing options under the market. If I can find Fortinet down here, 95 to low 90s, I probably will be taking that trade. It's a very nice area of support that they've established since the month of January. Fundamentals of the business are looking very good, very decent net margins, extremely decent net margins to say the least. And in terms of your expectations for EPS growth and revenue growth over the next few years, that's looking good. However, when you move into some of the lower stocks, or lower stocks on the list, not lower quality, Palo Alto Networks, we covered this one a few weeks ago when they had their earnings at 187. Is this company cheap? Is it cheap? Well, it's trading a forward price to earnings of 58, a PEG ratio of 3.61, and a price to sales of 14. Is that cheap? It's not cheap, right? So even though this sector has been performing very well, there's no major news today, right? Just rotation. If we get some volatility, this sector is known to have a lot of volatility. I'll be doing the exact same thing that I do on CoreWeave. If Palo Alto Networks gives me another few days like this, and I can find some put options, 170 to 160, I'll do it there. That is the next clearly defined level of big support. CrowdStrike is very expensive, but if we're looking to play pullbacks, play the levels. This is the next area of support. It was prior resistance. That would be a nice support and would be a very nice pullback from the top to there of about 12 to 15%. Is CrowdStrike expensive right now? We did the valuation at 450. It was a forward price to earnings of 128, a PEG ratio of 5, and a price to sales of 25. These trade very rich. So when they get pullbacks, they pull back hard. Zscaler, same concept. If I'm looking to play Zscaler, I at least need to find a level closer to 230, but that level is not even that big to begin with. So I probably wouldn't be playing Zscaler. I'd be playing something else, Palo Alto or CrowdStrike, that have better defined levels. Cloudflare, same thing. Look at this ridiculous rally, guys. It's absolutely ridiculous, right? We did the valuation at when they had their Q1 earnings at 135. Already then, it was a 5 peg. It was 170 forward price earnings. And that's with insane revenue and EPS growth numbers. So this has been a phenomenal rally since the tariff lows, guys. You're talking about 2x. Stock's up 2x. How much more do you want in a single straight line, yeah? Just focus on the pullbacks. If you get some very decent pullbacks, sadly for me, there's no area to write some put options on because there's no close support. This is not even a level. That's not really a support level, right? A support level is something well established, like down there. I'm not saying we're going to go back down there, but if we want to play the volatility, we don't have a clearly defined support level, maybe we can use the CoreWeave strategy by just selling puts as far under the market as we possibly can on a week-to-week basis, guaranteeing that, well, we're giving ourselves some very good distance, and these names all have some very good volatility that you can do that. So keep that in mind. That is how I would be playing cybersecurity. Another company that had a big decline today we're going to talk about is VRT, Vertiv Holdings. It was down over 10% today. Why? Well, because here we go. Amazon launching a cooling competitor for AI servers. They are starting to build their own cooling devices, or rather cooling hardware for their data centers. And of course, Vertiv, that's a big portion of their business. Many people have asked me about Vertiv this entire rally, and I was saying, yeah, it's great to play momentum. Arguably, it's also good for the wheel. When you get beautiful sell-offs like today, you can find some strikes well below the market, and you could probably make some decent money. But for a long-term portfolio, what is the competitive advantage of this company? Does it truly have a moat? Truly. Well, with the news from Amazon today, clearly not, right? Just Amazon alone was able to disrupt this stock 10%. What do you think is going to happen if other major data center players start doing the same, right? The company does not really have the moat that some people think it does. So it's fine to play this for momentum and go for swing trades, pullbacks into support, 110 down to 100 on big volatile moves, sell puts below the market. It's fine. The valuation of this one, we did it at 85. It's pretty good, all things considered, right? All things considered, the valuation is not too bad. But for long-term portfolios, I'm not the biggest fan. Try it your best and play the momentum on this one. Just play it level to level, guys. The pullbacks offer some good opportunities, and they're kind of carrying the trades into the top end of the range, right? Same as what we do on most stocks out there. So keep all of that in mind. Obviously, there's many more. One that I want to touch upon very quickly is Mercado Libre. So Mercado Libre for me, right, I don't really swing trade this one, but what I do is I constantly add long-term shares to my long-term portfolio. We covered their Q1 earnings in around the 2,400 range. You can see it has a very steep price to earnings ratio, but look at the revenue and EPS expansion, guys. It is a 1.5 peg at 24.50. It is still a buy. Price to sales is very good as well, 4.71, and a very interesting free cash flow yield. It is still a buy. It's a buy here, and it's a buy all the way through the decline. So in the event we get a weekly sell-off, this is because of the news between the tariffs between Brazil and the United States, of course, right? This being a company that operates in Latin America, even if their business is not that exposed to tariffs because their marketplace is third-party sellers, and 85% of the products that are sold through Mercado Libre from third-party sellers are mostly sourced in China. And then their whole fintech arm, well, fintech has nothing to do with the tariffs overall, but it's the sentiment, right? It will sell off on tariff sentiment, as we saw down there. Super high-quality company. From here all the way down into support, which would be 2,100. It is a buy for me. Mercado Libre, one of my favorite foreign stocks to own as part of a long-term portfolio. You might think, yeah, but it's ran so much, it can't possibly be still a good opportunity. Well, I mean, the free cash flows are interesting, the margins are expanding, and I don't know, you tell me, man. Revenue last year was, or EPS last year was 33. By 2028, it's 125. Just from this year, it's going to be over 2x in EPS, almost 2.5, right? Revenue from this year through 2028 is a 2x, almost a 2x. So you tell me if everything is priced in for Mercado Libre at these valuations, talking about price to sales and talking about PEG ratios. I just showed you cybersecurity, right? And how rich they trade. And a lot of those companies aren't even profitable. So Mercado Libre is still an interesting opportunity in my humble opinion. That being said, a few more. Walmart for me, covered this one a few times on the channel, is a buy down here for me, 93 down to 90 bucks. I'll be using the wheel strategy to benefit from this very beautiful support range that the stock has been trading in. It's been a little bit weak, unable to break above this resistance range. I'm just looking to play the pullback on Walmart. It needs no introduction, guys. At the end of the day, it's Walmart. I'm just looking to play some short-term oversold. If we draw down a lot quickly, it'll probably be close to daily oversold. The short-term timeframes are already 4-hour oversold and 1-hour oversold. And when I see that on a company like Walmart, it doesn't happen too often. You know that I'm going to play this one, right? So I'll give you guys a little bit of a glimpse. Not supposed to show you guys the trades until tomorrow. 93 strike next week for 52 cents is what we did on this one today together. And CRM, another one that I wanted to touch upon, guys. Beautiful level of support down below, 263 down to about 236. Not a bad level, right? What has CRM done since the tariff lows? Nothing. They rallied. They gave a lot of it back, 50% of the move back. They've just been consolidating sideways, kind of like Apple, above a support range. CRM, in my opinion, if you are a fan of this style of company, is a buy. We covered their Q1 earnings on the channel when they had it, right? A few weeks ago, month or so ago. At 280, the valuation was very manageable. 25 forward price to earnings. A 1.84 peg, which is not too bad, but the free cash flow yield is very good, guys. Very good, right? And a lot of buybacks do remain for this stock. It's been doing a whole lot of nothing overall over the entire year. And year-to-date performance from CRM, I'll just show you down here. Let me just scroll down. 21% to the downside. High-quality company. If it's your style of company that you want to play, there's a couple of things you can do here. Sell puts or possibly position for some swing trade longs. So those are some of the ones that I wanted to cover to the downside, guys. The ones to the upside, I mean, you guys know the drill, right? We cover them a lot. Oh, MP Materials. I'll talk about MP Materials. The other ones we covered, which are the airlines, right? And the other ones, I mean, we talked about them so much this week, so I'm not going to keep bringing them up, right? But that being said, the one that I do want to talk about to the upside, MP Materials. Why are they up 50% today? The Department of Defense, guys. $400 million investment from the Department of Defense. Why is this noteworthy? Well, because the Department of Defense never invests in publicly traded companies. $400 million is a big investment. That being said, this company is a double-edged sword. Yes, the thesis is the reliance of the U.S. on foreign markets for critical minerals. This is a problem that MP Materials is seeking to solve, right? They are arguably the only U.S.-based producer of critical minerals that are sourced within the borders of the United States. So keep that in mind. Yes, they're exploring in other countries and different endeavors and stuff like that, but most of their production is sourced in the United States. So on top of that, we have a favorable administration for U.S.-based production of things, namely critical minerals, right? President Trump is very favorable for this style of company. And you now have the Department of Defense directly investing in the company, which is something that they never do. So, of course, you have those qualitative aspects to the company, which could mean that it's a good buy. However, it is a long-term buy, guys, right? This is not Palantir. Although the stock price can appreciate quickly, you are pricing in a lot of growth for the future, guys. A lot of growth. Take a look at the forecast, right? This company is trading right now at a $7 billion market cap. First question you should be asking yourself is, how much money are they actually making in terms of revenue? This year, $260 million. 2028, $700-800 million. They're trading at 10 times 2028 sales. That's a long way away, guys, which is why I say, and even EPS, right? EPS is negative all over the place. It's a mining company. You know it's going to be beholden to the same problems that mining companies always have, which is heavy capital expenditures, thin margins, thin free cash flows. Yes, they're doing something that the United States needs, which is good for the qualitative aspect of the thesis, but the fundamentals, how long is it going to take the numbers to catch up? Probably a long time. So anybody buying here, or anybody that was buying back there with that thesis is obviously very happy. Matter of fact, it is some sort of a take profit zone right now, as we can clearly see. If you are buying here, right, saying, oh, well, because the DOD bought something today and going for the moonshot, that's fine. Just understand that you're playing momentum. You're playing the narrative, which is fine. I'm not opposed to doing that, but definitely don't buy this one because you think the fundamentals are undervalued, right? So choose your battles accordingly. I'm not opposed to a position here, but if you're the type of person that buys things for the quantitative aspect of the business, the fundamentals, the revenues, right, and all that stuff, well, it has to be a longer term thesis. You have to be buying this one, trying to at least hold it for the next 5, 6, 7, 8 years as this critical mineral thesis expands within the border of the United States. So keep that in mind. So a bit of a longer video today, guys, but I wanted to focus on the rotation because I think it's very important. And you guys wanted me to bring you more trading content, how I break down moves like this, how I look at names to the downside, how I look at rotation. Spent a lot of time on CoreWeave as well. So hopefully you guys enjoyed a bit of a longer video today. Tomorrow, I'll try to keep it a lot shorter. So that being said, that's everything I had for you guys. Hopefully you enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. And as always, guys, if you have any questions, feel free to leave them down below in the comment section. I'll be answering all of the questions tonight after I post the video, of course. And as per usual, guys, if you wanted to participate in a trading and investing community, you might consider joining our community. In the community, of course, you get access to all my trades, whether it's swing trades on stock, whether it's the wheel trade strategy that I run a lot, whether it's call options, call debit spreads, and everything in between. You get access to all the trades. These are the trades from this week. Here are all the trades from, I don't know, the past 2 months or something like that, right? You can see here, the green check marks are win, the red circles are little losses. So, you know, for what it's worth. We also do private morning live streams in the morning for 2 to 3 hours where I trade live and answer all your questions. And you can ask me all your questions in our relevant chat rooms all throughout the day. And I'm very fast to answer you guys. You also get access to our educational segment where there's about 12, 13 videos in there, technical analysis, fundamental analysis. Mostly all of them are an hour long. You guys know me, right? I love to talk and I love to do detailed presentations, lead call strategies, debit strategies, put credit spread strategies, all different types of strategies, and a whole educational component to them as well. Trading psychology, how to grow small, medium, large accounts. It's been a very a section of the Discord that our members have been finding a lot of value in, all things considered. And as an additional bonus, you get access to all my charts, right? Whenever you see charts with support resistance levels like this, you see charts with, you know, fundamental analysis that I do on companies on after earnings, you can copy paste all my watch lists and all of my charts, right? It takes 5-10 seconds. You get to copy paste everything and it becomes yours. It's just an added benefit. If you guys want to join, the link is always down below in the video description. I would love to see you guys in there. And if not, I guess I'll see you right back here on the channel. That's it for me. Have a great rest of your night. I'm going to go rest my voice and I'll see you guys tomorrow for the Friday market recap. Wrap the week up strong, guys. Hopefully you guys have had a good one so far. Take care and peace.